Hi everyone, so today we'll do a stock analysis on Santos Limited, ticker STO.AX, and it's an Australian oil and gas exploration and production company. Quick disclaimer, I'm not a financial advisor, this is my own research, up to you to make your own decision. So here is the usual summary. We go with a company profile, then do the fundamental analysis, then we do the technical analysis, the price catalyst, and end up with a conclusion. So let's start with the company profile. So Santos is a global energy company with operation across Australia, Papua New Guinea, Timor-Leste, and the United States of America. And it's got important Australian domestic gas supplier and a liquefied natural gas supplier in Asia. So in the description, I can notice that their goal as a company is to pretty much like abating emission through carbon capture. Not really a big fan of this, but let's keep it simple and say that I feel like they're concerned more about that than growing their business. That's the first impression anyway. So the Santos Limited was incorporated in 1954 and is the headquarter in Adelaide, Australia. So before we go through the assets, I wanted to remind you guys what upstream, midstream, and downstream means. So we're gonna be using that after in the assets. That's why. So the upstream is mainly the oil and gas exploration and production. So it's basically how do you extract that crude oil. Then the midstream is pretty much the transport and storage. So how do you move that crude oil into like a place for an amount of time, or where do you transport it through pipeline or any boat or like trucks. And then the downstream is pretty much distribution and like refining of those, so convert it into petrol that you can use. So here is a list of all the company assets. So from what I understand and what I've seen in the reports, the first four are actually what they're really producing. So the operation, they call it, and then that's pretty much like all the one in greens. So that one, and that one. So they have 5 versus 4 here. So I forgot which one, but there's one that is merging too. And then those are really what this company used to produce and distribute. And then they have like upstream projects. So there's a lot of should I say more like exploration companies. Some might be actually producing a little bit, but they are nowhere near the first 4. So there's just like tiny little extraction at most, or just exploration, and they are a little bit all over. So they have one even in the US, but overall I noticed that it's very concentrated around Australia or near Australia, and not really anywhere else. So the last part of the assets are the midstream portfolio, and honestly they're just like a bunch of like pipelines, transportation. I didn't want to list them all, but they're all mainly located around Australia and Timor-Leste, but mainly Australia anyway. So I struggle to know where to find the clients. On their reports, I couldn't find any clear evidence of all the clients and the percentage, so it's hard to know, which is a little bit downside. I found it a little hard, honestly, to find information. So maybe it's me, but compared to other companies, I found that this one were a little bit trickier. So what I found at least is that the clients are Taiwan, China, South Korea, Japan, and Singapore. So I'm guessing that if it's Singapore, it might even be around Southeast Asia. But that's all I found related to the clients, and I tried to look on their reports, search for it, but couldn't find any relevant information. So this is the strategy of the company Santos, and I found that the first sentence made me feel a little bit confused, they want to focus on their decarbonization and a low carbon fuel strategy. And I'm like a little bit confused with that, because it sounds like more of a political agenda to me than really what they would do in this kind of industry. I mean, like, they are what they are, and that's like the dirty part. But I would say what I would love to see is more like how would they, you know, like protect the land and make sure that they don't actually pollute as much. But yeah, that's what they focus on. So like net zero emission, not really my cup of tea, to be honest. It's concerning me more than anything. But let's say other than that, they're focusing on lower cost producer, and then like growth and sustainable shareholder return. So it's a bit mixed up to me. They contradict each other, to be honest. So in here is just a continuation of their strategy, saying that the midstream and energy solution is their decarbonization business, and basically on lowering carbon energy. So to me, I'm not sure how like to really like measure that, but anyway, that's a political thing, or like I would say some trend thing. I'm not sure. I don't understand it, and but I don't want to go further than that, and apologize. That's not really the purpose of this video, but as you can see, that's their goal in the next 20-30 years, so do as you please with that. So now let's talk about the real business, what they're really doing. So I noticed that they really focus on gas, or like liquefied natural gas and sales gas are pretty much like the two-thirds or more, no, not even, like nearly 85 to 90% of their revenues. The crude oil is barely anything of 104, and like the rest that I don't think is even relevant. It's not much. So to me, it's all pretty much 90%, so around there, natural gas. So anything to do with that. So kind of good in a way, because if you are not into oil, you can focus on that natural gas. So maybe that's why they have their missions on like reducing gas emission or whatever. I'm not sure. Maybe that's how they sell their stuff. But yeah, that's what it is, natural gas. By the way, the previous slide was talking about the first quarter of 2025. So I didn't actually get the full report of last year, but just the latest updates. Like I just gonna go run through a few things, not going through the whole thing, but this seems pretty stable. That's what matters. And it seems to be like their break-even oil price is less than 35 barrels in 2025. So this is what confused me as well. I'm not an expert, so I apologize, and if you guys could explain to me, if you know, would be interesting. But I like they're basically not selling that much oil, but they said that their break-even price is 35. So would that be the equivalent of 35 oil and even whatever they sell as liquefied natural gas and all that? So I'm not too sure, but let's keep those words. If this is the current price of oil is around $60 to $62, so that would make them very like low price, I would say. So they will start really losing money under like 35, or unless they just invested. But yeah, anyway, this sounds pretty good, and it shows again that like this is a proof of what I was saying earlier, that most of their 4 assets pretty much produce everything in there. So they have like 5, but the 4 main ones are there, and that the rest are just exploration basically. And yeah, again, like you can see more there, but I struggle to compare because they're all very different units. So this is a slide that a friend of mine sent. If you're watching, thanks, Mike. So those are pretty much all the companies in there, like in oil, like a lot of them, and then they were showing. So if in a previous video we had a look at WDS, so it's interesting because their price to just sustaining capital is $25, which is pretty low, even though they are a little bit above, but then that would mean if they give dividend and capital. So I mean, like I would rather look at those price only. But so STO is actually higher, but it's still like the $35 that we mentioned earlier, so it seems to be that price then. And then like overall I would say they're a little bit more expensive, but I say it's pretty good. They still break even at 35, and I wouldn't mind if they don't make any money for a year or two, but as long as they actually not in deficit and taking loans, so that's not too bad. Not too great either, but I still think it's good. So that's a plus for me. So now let's look at the fundamentals. So as usual, the kind of business I tend to like. So the P is under 10, 9.5. The forward is 11, but I mean, like, all very reasonable. And the price to sell, price to book, and enterprise value, they're all very, very cheap, and under 1 for price to book is always what I like. So all good for me. So in here I will explain a bit further on all the like the financials in there, but they look pretty reasonable. Then the cash are 1.8, something like that, and then like the debt are 6.6. so there's a bit of debt for sure, like 43%. Not that bad, but just still quite a bit of debt. And the leverage free cash flow seems to be not that high at the moment, so I'm guessing if oil price rise, it would be easy to pay back the debt, but yeah, a little bit. And then another thing I wanted to point out is the percentage of insider. So this is quite low, 0.3. I never really like it, but at the same time it's a nearly 20 billion market cap, so it could be explaining why it's that low. Still, I would rather have something a bit higher than that. And the institution, 35%, fairly reasonable. And they give, like, most of the time dividend around, like, let's say 4 to 6%. Not bad either, but with a ratio of 80% means they might not sustain that. So just wanted to show the balance sheet in there. So as you can see, they're very, like, stable company. Their debt is a little bit high, like we say, compared to the equity, but recently equity is slightly above the debt. Yeah, I mean, like, not ideal, but at least they're stable. I still think it's a little plus. So they stick. And then I would say that the revenue, they are the same, like pretty stable, and still surprised me that in 2024 they still had a good net income. Some companies were not doing as great, and yeah, like, even the revenue is stable. I think it's quite good, so I like that. So there are a few charts in there. I won't go through it much because it's very, like, fairly stable, but their cash flow has been declining a little bit. This I'm guessing is related to the oil price, or maybe not gas price. And like the capital expenditure has been rising a bit, so I mean, it's good and bad. If they can produce more, that would be good, so there's something to watch out. I haven't really looked at why and all that, but it's not, like, really concerning yet. The number of share issued has been decreased, but it's not that much. It's just 3%, I checked. So I would say it's not really that relevant, but if they can continue to do another 5-10% more, that would be definitely a plus. And the last part is the balance sheet to the, like, like, cash and everything, same, very stable, nothing to add. It's just pretty much the same. So as we said previously, insiders has nearly nothing, like very little, 0.3% of the company. But at least let's say that the managers or, like, the directors have been buying recently, and some were reasonable numbers, like 200,000, 150. I mean, like, I'm guessing if they put that kind of amount, it means that they believe it will continue to rise. Yeah, I mean, it's not huge, but, like, it still prove that maybe there is a bit of value. And the current price is actually 565, and most of the buy has been around 6 to even nearly 7. So yeah, that sounds like, if you think it's a reasonable price at 565, you will be cheaper than the directors. So why not? So let's now look at the technical analysis for the stock STO. So I mean, honestly, I'm not a huge fan of this chart, and it's mainly because when I've seen the previous cycle from 2000 around there to the top 2009, they did like 4, 5 to like something like 3 or 4x. So it's not that bad, to be honest. Still be happy with that, but not like a huge move. I found that WDS sounds like more like a growth stock to me, and that one is a bit like, when I see the recent price as well, so it broke on downside, and then now it's kind of like looking almost like it will actually come back down. So if you don't look at valuations and you just look at the chart, it's actually on the downside. It could revert like in shorter term, but it doesn't look like any like interesting. So let's look now at the daily. So again, like pretty good downtrend, nothing to even discuss. Maybe a bottom pattern forming there, but like you have no idea. Like this could be an easy continuation on the way down without any problem, and you will need a massive push up to 6 to even 7, I would say, to change my mind truly. And I mean, if you start spending 7, obviously you're not gonna get a good discount. So I actually don't know, but not huge fan of these kind of charts. So now I give an update on oil. It's not even really related to oil, that stock, not that much. I mean, it is, but the ratio says that it's something like just 10-15% of oil production. But in a way, because the like directors compare that with oil, I'm gonna just use oil anyway. So in my opinion, I would say that like at the moment at 62 or 3, it seems to be like it broke on the downside for sure, but it will have to the same, get to around 70 for me to change my mind and thinking we could go on the uptrend again. So if you like it cheap there, I don't blame you. Like it's actually could be a good deal, but I could easily as well fall back down further. So it seems to match actually the chart of the stock in a way. So yeah, not sure what to say in here. It could be both ways. You can get a cheaper price around here for sure, but at the same time, nothing will like tells me that it's gonna go up either. So we are in downtrend. Just in case it has any relevance, but I cannot really confirm, I will talk about natural gas as well. So to me, natural gas is a little bit better. It broke the structure in there and retest in here. So I'm thinking I might actually continue on the way up. At least it is at the moment still on uptrend. For me to change my mind, you have to break around like $3, I guess, something like that, and then I will change my mind. So this is good, a plus, but I'm confused because I haven't seen easily how the company is really following which price. But yeah, anyway, doesn't matter. It's not that bad. So as a conclusion, I would say that the advantage is the cost of production. So again, I'm a bit confused with that, but let's say $35 versus the $62 of current price. So it's like nearly 40%, something like that. So that's at least the company will sustain for a while. And then insider buying, which is good. And then like and then now current price is lower than that. So if you were interested, then the insider buying. So the good thing as well is they're looking overseas and elsewhere to diversify the portfolio, and not only be in Australia. And then like it's a fairly stable company. And then the risk, I would say, compared to WDS, it's mainly in Australia, this one, and like doesn't have any production elsewhere. It's not that terrible of a risk, but if I was to compare with WDS that has 50-50 with US and Australia, I kind of prefer that. Then the climate change political agenda is not my cup of tea, to be honest. I actually think if they didn't put that, I'd probably be more interested, because I feel just confused on what they really want to achieve, and maybe they have good reason and you guys can explain to me, but I'm not really a big fan when I see these kind of word used. And then like the oil and gas price stay on that trend, and then like basically the chart doesn't look as appealing in my opinion as well. So that's about it for today. Hope you enjoyed the video and see you in the next one.